What if your rent was paid every month without you lifting a finger? And what if you could make it happen with just $90 a week? This isn't a fantasy. It's a real strategy using 5 powerful dividend stocks that pay you monthly. We'll start by exploring the first stock on our list, a firm that not only provides steady monthly payouts, but also backs them with strong growth potential. From there, we'll make it even better and count down through 4 more top picks. Each one has been chosen for its ability to deliver robust dividend yields and consistent performance. And I've got a special gift for you, a free dividend freedom calculator that I'll share once we hit 100 comments. Stock number 5, EPR Properties, ticker symbol EPR, a specialty real estate investment trust with a fascinating business model that goes beyond traditional real estate. Unlike conventional office or apartment REITs, EPR focuses on experiential properties, movie theaters, ski resorts, golf attractions, and family entertainment centers. What makes EPR particularly attractive is its position at the intersection of real estate stability and entertainment growth. As consumers increasingly value experiences over material possessions, EPR's property portfolio is positioned to capitalize on this long-term cultural shift. The company maintains a conservative balance sheet with manageable debt levels and significant liquidity. The financial metrics make EPR a compelling monthly dividend option. With a current yield of 7.8%, a 5-year dividend growth rate of 3.2%, and historical share price appreciation of 4.1% annually, your investment benefits from both income and growth components. Let's break down what happens when you consistently invest $90 weekly into EPR and reinvest all dividends. By year 1, your portfolio exactly matches your contributions at $4,680. But by year 10, the compounding effect becomes visible as your investment grows to $79,450, generating about $517 in monthly dividends, enough to cover some utilities or groceries. By year 20, your EPR investment balloons to $296,300, producing approximately $1,923 monthly. The critical $3,000 monthly income milestone arrives in year 28, when your portfolio reaches $628,400. This timeline might seem long, but remember, this is completely passive income requiring minimal ongoing management, just consistent contributions and dividend reinvestment. Stock number 4, Stag Industrial, ticker symbol STAG, a real estate investment trust specializing in single-tenant industrial properties across the United States. Stag's portfolio consists of warehouses, distribution centers, and light manufacturing facilities, the essential infrastructure powering our e-commerce economy. Stag stands out in today's economic landscape because of how perfectly positioned it is for the ongoing digital retail revolution. As online shopping continues capturing market share from traditional retail, demand for Stag's logistics and distribution properties continues rising. Their tenant base includes both Fortune 500 companies and growing mid-sized businesses, creating a balance of stability and growth potential. The dividend metrics make Stag particularly attractive for monthly income seekers. It offers a current yield of 4.8%, a dividend growth rate of 4.5%, and average share price appreciation of 5.2% annually. The company converted to monthly dividend payments in 2013, making it one of the more established monthly payers in the market. With our $90 weekly investment strategy and full dividend reinvestment, your Stag portfolio reaches $4,680 after 1 year. The compounding acceleration becomes significant by year 10, with your investment growing to $83,200, generating about $333 monthly in passive income. By year 20, your stag investment reaches $341,600, producing approximately $1,366 monthly. The target $3,000 monthly income is achieved in year 26, when your portfolio grows to $752,500. That's 2 years faster than our previous pick, shaving significant time off your journey to financial independence. Stag's combination of e-commerce, exposure, and monthly income makes it an excellent cornerstone for any dividend portfolio focused on the future economy. Stock number 3, LTC Properties, ticker symbol LTC, a healthcare real estate investment trust specializing in senior housing and healthcare properties. LTC invests in skilled nursing facilities, assisted living, communities, and independent living facilities across the United States. What gives LTC a competitive edge is demographics, specifically the unstoppable aging of America's population. With 10,000 baby boomers turning 65 daily and the 75-plus population expected to double by 2040, demand for senior housing facilities is projected to surge for decades. LTC's portfolio is strategically positioned to benefit from this demographic tidal wave. From a dividend perspective, LTC offers an attractive combination of yield and stability. The stock currently provides a 6.4% dividend yield with a 3.8% 5-year dividend growth rate and 2.9% average annual share price appreciation. While the yield is substantial, it's the reliability of these payments during economic downturns that truly distinguishes LTC in the dividend space. Applying our consistent $90 weekly investment approach with full dividend reinvestment, your LTC portfolio reaches $4,680 after year 1. By year 10, the investment grows to $74,650, generating approximately $398 in monthly income, enough to cover some utility bills or a car payment. The compounding effect accelerates significantly by year 20, with your portfolio reaching $281,800 and producing about $1,503 monthly. The key $3,000 monthly income threshold is crossed in year 25, when your investment grows to $606,900. This timeline represents the middle ground in our countdown, not the fastest route to financial independence, but with significantly less volatility than more aggressive options. Stock number 2, Dynex Capital, DX. Runner-up in our countdown is Dynex Capital, ticker symbol DX, a mortgage real estate investment trust that invests in mortgage-backed securities. Unlike physical property REITs, Dynex doesn't own buildings. Instead, it manages a portfolio of residential and commercial mortgage investments, generating income from interest rate spreads. Dynex's advantage comes from its highly specialized management team with decades of experience navigating complex interest rate environments. The company employs sophisticated hedging strategies to minimize interest rate risks, allowing it to maintain dividend payments even during volatile economic periods. Their flexible investment approach enables them to shift portfolio allocations as market conditions change. The dividend metrics for Dynex are particularly impressive. The stock currently offers a substantial 11.2% dividend yield, combined with a 2.7% historical dividend growth rate and modest 1.8% annual share price appreciation. This high current yield significantly accelerates the compounding process, especially in the early years of portfolio building. Let's examine our $90 weekly investment strategy with Dynex. After year 1, your portfolio stands at $4,680. By year 10, thanks to the enhanced compounding from the higher yield, your investment grows to $93,850, already generating about $876 in monthly income, enough to make a meaningful difference in most household budgets. The acceleration continues through year 15, when your Dynex portfolio reaches $217,400, producing approximately $2,028 monthly. The target $3,000 monthly income milestone arrives in just 19 years, when your investment grows to $439,300. This represents a significant time saving compared to our previous options, cutting several years off your journey to financial independence. However, this accelerated timeline comes with increased risk. Mortgage REITs, like Dynex, are more sensitive to interest rate changes and credit market disruptions than physical property REITs, potentially leading to greater price volatility. The higher yield partially compensates for this additional risk, but it's an important consideration for risk-conscious investors. Stock number 1, Oxford Lane Capital, OXLC. Claiming the top spot in our countdown is Oxford Lane Capital, ticker symbol OXLC, a closed-end management investment company focused on collateralized loan obligations, CLOs. These structured credit investments contain pools of corporate loans, providing Oxford Lane with income from both interest payments and principal returns. Oxford Lane's competitive edge comes from its specialized focus in the CLO market, an area many individual investors find difficult to access directly. The management team leverages deep expertise in structured credit to identify mispriced assets and market inefficiencies. This specialized approach allows them to generate yields significantly higher than most dividend stocks. The dividend metrics for Oxford Lane are exceptional for income-focused investors. The stock currently delivers an impressive 16.4% dividend yield, with historical dividend growth averaging 1.5% annually, and modest share price appreciation of 0.8% per year. This extraordinarily high current yield creates a powerful compounding effect that dramatically accelerates the timeline to financial independence. With our $90 weekly investment strategy and full dividend reinvestment, your Oxford Lane portfolio reaches $4,680 after year 1. By year 5, the investment grows to $38,750, already generating about $530 monthly. A meaningful contribution to many household budgets. This early income production demonstrates the power of high-yield compounding. The acceleration becomes truly remarkable by year 10, with your portfolio reaching $145,600 and producing approximately $1,992 monthly income. The target $3,000 monthly income is achieved in just 14 years, when your investment grows to $262,800. His timeline cuts our journey to financial independence almost in half compared to our first pick. This accelerated timeline, however, comes with substantially increased risk. CLO investments can experience significant volatility during credit market disruptions, and the high yield partially compensates for this additional uncertainty. Oxford Lane represents the sprint approach, fastest to the finish line, but requiring a stronger stomach for volatility along the way. So what's the optimal strategy? Should you go all in on Oxford Lane to reach financial independence as quickly as possible? Or should you play it safe with EPR properties for maximum stability? The answer for most investors lies in the middle. A diversified portfolio approach. By creating a balanced portfolio with equal allocations to all 5 stocks we've discussed, you can create a best of both worlds scenario. Let's see how this balanced approach performs with our $90 weekly investment strategy. After year 1, your portfolio stands at $4,680. By year 10, the investment grows to $82,400, generating approximately $639 in monthly income. The compounding effect becomes substantial by year 15, with your portfolio reaching $179,600 and producing about $1,394 monthly. By year 20, your investment grows to $351,800, yielding approximately $2,731 monthly. The target $3,000 monthly income threshold is crossed in year 22, when your portfolio reaches $423,500. If you've made it this far, I've got a powerful dividend cheat sheet made just for you, and it's completely free. This guide includes 5 monthly dividend stocks, dividend payout schedules, and a simple tracker to help you stay on top of your income every single month. Just drop the word dividends in the comments. Once we hit 50 comments, I'll unlock the link for everyone to download. Now that you've seen 5 monthly dividend stocks that could help cover your rent, the next step is building a portfolio that pays you for life. In the next video, I'll walk you through how to build a monster dividend portfolio, step by step. Don't miss it.